Good morning, ladies and gentlemen. How's everybody doing today? Camera seems a little bit off, but that's okay. Good morning, guys. How's everybody doing? So awesome. Thank you guys once again for tuning in. Really appreciate it. Always enjoy having you guys on for a little bit every single morning, as well as I love doing this. So hello. All right, so sorry for not being on past couple days. Was on our annual golf trip down in Kentucky. It actually jumps around every year, but anyways, we were down in Kentucky for a couple days. I was golfing, wasn't trading, wasn't working. Great time. So haven't been online trading since Tuesday, I think, maybe Wednesday. So didn't trade Wednesday, Thursday, Friday, I think. Now here we are. So since I've been gone, we've had some red days in the market, dragging the market down. We've had Netflix's earnings. We've had a few other companies report earnings. This week, we're going to have a lot of bigger names like Visa, PayPal, who else? Boeing, Intel. So we got many big name companies starting to report earnings. We have markets basically at all-time highs that are starting to sell off. You have gold that's been ripping, silver's been ripping, so there's a lot of interesting movement going on in the market. Still trying to get myself caught up to speed after being gone and not really working for a solid week. Trying to get my gears back in order here. So probably going to take the day slow, may or may not trade. We'll see how the day goes. We'll see it presents itself, okay? So good morning, guys, and anyways, let's jump into it. So really the only thing that I came up with today that I enjoyed or really liked, there's a couple things, but generally it's going to be Netflix. It's a no-brainer. Netflix, as many of you guys know, earnings report, gap down like 30, 40 points or something. Then I had a really big sell-off continuation day yesterday, from 326 all the way down to basically 312. Now, normally plays like this where they come down, they kind of hang out, then they fade to the downside and continue down. They'll usually take another couple days to get their footing. So I think today there might still be a short play. But I also think we're probably going to start seeing, I honestly think we're going to have a nice short play initially to start the day. And then we're going to see some buyers start coming in on these low prices of Netflix next. Then tomorrow, start seeing some more buyers come in. So I think probably towards the end of the week, that's where I would anticipate more of a bounce day on Netflix. And until then, I think we kind of see some accumulation or share kind of accumulation and distribution throughout the next couple days. So going to be following Roku short today. And then I'm going to be following a long bias throughout the week. So I'm really long bias the stock, but in the short term, maybe today, tomorrow, more a little bit on the short side for an intraday play. So definitely keep an eye on this, right? So looking at Netflix throughout this whole area, if you actually go back and you look at this big move up, basically from 258 all the way to 320, there was really no hesitation in the stock on this long leg up, which basically means it could just fall all the way down, kind of. It's not going to, because it's very unlikely Netflix goes from 320 all the way down to like 230, 240, 250. But in the future, right, if this starts to trend down, you should anticipate that it will trend down through all this price action with very, very little hesitation. Right now, the only thing I could see what would be happening is we have this support here at about 320, 319, 318. And the way the system basically works is, people see support, they put their stop loss below support. So this candle yesterday would have knocked out a bunch of people's stop losses, as they would probably have it below this dip level. And then throughout the next couple days, we'll probably see, there's a good chance we see some buyers start stepping into Netflix, and then the price comes all the way back up. But this candle down is usually a good candle to trigger a lot of tight stop losses on the stock. And when those stop losses are getting triggered, whomever's in the backside of it, a lot of those guys will be buying up those stop loss orders. And then in the next day, couple weeks, you'll see the price of Netflix run the opposite direction. So Netflix does have a really big gap to fill. So basically, we're trading a bounce gap fill type scenario over the next couple days to weeks. Next one, really there is no next one for it. I was going to put Skechers on here, but then I decided to take it off because I'm like, whatever. But yeah, I don't think we're actually going to focus on Skechers today anymore. But anyways. UWT for a swing, possibly. Let's see. I mean, yeah, you could swing that. I mean, you probably get a bounce, next couple days. It's possible. I mean, it just did its gap fill, so, really you should have been buying 2 days ago or yesterday. Now is probably not too bad, but you're missing a good chunk of the move. I would say it's a decent opportunity to swing. If you do swing, your target should basically be, and that's the thing, is if you do swing, you shouldn't really be aiming for anything more than 1457 within that move. So that's the problem, is it's really not the best setup. I know what you're looking at and I know what you're looking for, but it's really not the best setup to be swing trading. I would rather be swing trading it down here at this low price of 10 for a bounce, because if UWT makes it all the way down to 10 relatively soon, next couple days, weeks, whatever, if it does and it bounces around this 1027, then you could be targeting like 1320. But for right now, you can really only target about 1450 for an easy, identifiable trade. Anything over 1460, you're really just banking on the markets moving higher for you. But in the short-term technical aspect, you could probably target like 1450 on that. So it's like, probably not. I would get long on it down towards $10 if it gets there. If it doesn't get there, then it is what it is. But I would probably do 10, because the bounce off of 10 would be much bigger than the bounce here, which would lead to a bigger profit margin on the trade. Never traded the Forex market. Haven't. Nope. I've considered upgrading, or basically upgrading my trading account to the point where I could trade Forex and futures. I was actually supposed to get on futures a while back, and then I sent a message to Thinkorswim. They told me how to do it, then I never did it. So probably should do that pretty soon. Some other things that I'll just talk about, because again, there's really not much that I'm crazy about today, so I don't want to just bore you to death with random stuff. So I'll give you some useful information. Silver, price of silver been shooting up really well recently, so that's something to take note of, right? There's money moving into the silver market. If you look at the volume recently, we've had really big volume, over 10. It on average trades about 10 million, a little less than 10 million SLV silver, ETF that is, and now we're starting to trade in 20, 30, 40 million shares. Granted, this is a really nice move, so it's bringing attention to the stock as per the big volume increase, but again, that means people are buying for some reason. And I can tell you that people aren't just buying silver randomly for this price spike, because, think about it. That's only a move from 1444 to, it's not a bunch of momentum traders pumping up volume in here. So something to take note of there. Gold, GLD. I always follow GLD, but you could follow the gold futures if you want. But GLD, again, we know that gold's been on a nice run. This is something to take note on GLD. There is a bearish divergence. You can see from this top here at 135.60 to this top here at 136.60, another dollar higher. You can see we've pressed into new highs, while at the same time our momentum is dying out or trending down. So it's very hard for a stock, ETF, any really financial security to continue higher in a move when the momentum's channeling or trending down. It's telling you that it's dying off. So good chance we see a bearish move coming pretty soon on GLD. So GLD is fairly expensive at $136. I'm telling myself, I'm like, well, $136, I guess I could short the gold. What's something else that maybe would be better if I wanted to short? So I'm like, okay, well, let's look at gold, actual ticker symbol gold, GOLD. So this is Barrick's Gold Corporation. As you can see, they look very similar to GLD. They're going to look very similar to the gold futures market, right? Gold futures, it's all very similar right now. GLD, gold futures, et cetera, blah, blah, blah. It doesn't really matter. It's all very similar, right? So when we look at the gold futures market, we had this bullish pennant, arguable bullish pennant. It breaks out into a new high. Yet the momentum isn't really strong. There was more momentum going up in this move and in this move rather than this move, right? So what we're starting to see is a bearish divergence in the gold market. And I wouldn't say long-term bearish divergence. It's more of a short-term kind of play, right? So you got it here, right? You got a clear as day, what appears to be clear as day, bullish divergence already started on the gold futures, right? Then you come over here to GLD. You got a bearish divergence that's already starting on GLD. You have yet to have a bearish divergence start on the actual ticker symbol gold. It kind of started here, then the RSI kind of bumped back up and it pushed into a new high again. So this one has yet to roll over, which means you're still ahead of the start of the move. I said a lot of weird words there. I hope it's okay. But you're still ahead of the start of the moves because there's so many ofs in there. But anyways, so this is something that could probably have a short play in the next couple weeks. So you should probably follow that if you guys short or have the capabilities of shorting or you understand the gold market and you've been kind of following this and the he say, she say thing on the channel for a bit. Probably follow gold. That wouldn't be bad. I have no clue if it's even at a resistance point. It basically is. It's starting to enter into a great sell location. So it makes sense that we're starting to see a bearish divergence as the price of gold's been just ripping up into a resistance zone. As you get into a resistance zone, the buying pressure would slow down, which then would mean that the momentum would slow down, which then would mean you're probably getting close to a top, which means the stock would probably start to roll over soon. So I think gold is kind of a good option for potential short play, not in the not too far distant future. I thought, Mr. Music, thoughts are still the same. I got two scenarios that play out. So markets are going down for sure. Without a doubt, they're going to go down. But in the short term, as of now, and that's the other thing, right? Everyone always wants to bash in somebody else's head for trying to predict macroeconomic moves where it's like, it's literally so hard to do. Yet we all try to do it. To a certain aspect, right? We don't go all in thinking that we're just going to be right. We don't do it. We let the market speak to us, and then we build up scenarios of what could happen. And as soon as something starts to play out the way we think, then we take a trade based on risk and manage it and et cetera. But, so I got bashed on because I called for, a market recession and crash during, 2018? We didn't get one. We just had like the world's biggest, correction. So again, there was no recession, there was no crash. Just a ginormous economic correction. Once we've balanced and we've recovered, we've pressed up to, near all-time highs. But even at all-time highs, you're not really seeing a ton of people all hippie, hoorah, wanting to buy the market. I still don't want to buy the market. So part of the reason I think we're not seeing a crazy parabolic push into all-time highs, and we're not yet seeing a big sell-off in the market, is because of 2008. And what I mean by that is a lot of people still remember 2008, and a lot of people still don't remember 2008. But if you go back, you think about 2008, people basically lost a lot, things were bad. So now in this market, you have this market at like all-time highs, been going for 10 some odd years, right? The way the market works is the market only stops going higher the market stops going higher when there's nobody left to buy the market, okay? That's how it works. If, I had some if I was selling lemonade out front of my house, by gosh, I would not be selling lemonade out of my house in the front yard. But if I were 26 years old selling lemonade on my front driveway, and I knew for a fact that I could stay open until 10 o'clock because that's when the last customer is going to be, and there's going to be a ton of customers that come all day long, and the last one's going to come at 10, and all I have to do is just sit there and be patient. I'm going to make more money. I would probably do it unless I had something really pressing, but right? The market's not going anywhere. The market, the S&P 500, the Dow Jones, they don't have some dinner party to be to at 9 o'clock. They don't have to do laundry, right? The S&P 500, the NASDAQ, the Dow, doesn't have anywhere to be but on the computer for traders, right? It's going to be there tomorrow. It's going to be there tonight. It's going nowhere, right? So when the market, right, it sits there, it builds and builds and builds and builds until it has captured almost every single customer that it can to buy into it, and then it rolls over and goes down. So you still have remnants of 2008 lingering in people's minds. So there's this idea that it's kind of like you still have people that are half in, half out right now, where it's like me, I've been not out, but I'm not buying anymore. I stopped buying, stopped buying, but I really took my foot off the gas pedal two or so years ago on the market. So I haven't really been adding money to the market. So now I'm a reason that the market's not really pushing much higher. I'm not really giving it any boost. Many of the traders in our group aren't investing too much money because I've already said, and they already know that we're already kind of high. So they're not really pushing the market any higher. So unless we have all of us and all of you to continue buying, it's not really going to press. Okay, I think we have half in, half out, where people aren't buying anymore and people are still buying, which means we're just kind of ho-humming along until something really bad happens. And then you have also the other scenario where you have a parabolic push into new highs because everyone goes, see, I told you we're supposed to go into new highs, and everybody starts buying up, and then you go into a market melt up where it goes parabolic to the upside, and then you have a bunch of euphoric people going, see, I told you it goes up, and then it just crashes on them. That's another scenario that I think will play out. But and I said 2 years ago, give it 2 years and we'll probably have a recession. Still no recession, but the numbers still point towards that direction, that's where we're headed. So nonetheless, long term, now probably 2-4 years, recession seems almost inevitable, probably going to happen. So what are my plays? My plays are gold. My plays are silver. You could look at some defensive stocks. You could, consider Dollar General in like a recession. You could consider McDonald's, in a recession. Utility stocks in a recession. So I already have a game plan in place of what I'm most likely going to do, and I've been saying it to people for many actually years now. So like if we go into a bad recession, think about buying Dollar General as a stock. Think about buying McDonald's. They're stable, right? During a recession, you're not looking to make shit tons of money. You're looking to be defensive, right? If you're an active trader, you can make money from the downside moves. But if you're just a typical average investor, you should probably be looking at things like Dollar General. Look at things like, utility stocks, because the first thing someone's going to, I've said this before, the first thing someone's going to do is they're going to stop paying for a $2,000 Apple stupid iPhone, and they're going to make sure they pay their water bill, their heating and electricity, right? The first thing I would do I would go from maybe $120 phone plan or whatever you'd be paying down to an $80 phone plan, right? Those are the things that I would be doing. Another thing I would be doing is maybe I'm not going to go to Myers, or I'm not going to go to the big name brand shopping store and spend $5 on soap, or $25 or $12 on a roll of toilet paper, right? A box of toilet paper. I'm going to go to the dollar store and I'm going to get dish soap for $1. I'm going to get my toothbrush for $1. I'm going to get these small little plates for $1. I'm going to get this probably not so good to eat frozen food for $1. I'm going to get my toilet paper for $1, which I do. I go to the dollar store for all that. I don't shop at any big store when it comes to those items. I shop at the dollar store. That's all I can do. Right? And I make a decent living. I can afford to shop at a big name brand store, but I don't, because there's no point. Why would I do that when I go spend $1? Right? So those are the things people are going to do in bad times. So it's not hard to figure out. You just got to think about the masses, and what are the masses probably going to do? They're going to try and stop buying as many phones. They're not going to buy as many TVs. They're not going to buy as many video games. They're not going to go out to eat as much. What they're going to do is they're going to start shopping and cutting down on expenses. They might go to the dollar store more often. Things like that. Okay? You can get food at McDonald's for basically $1. So McDonald's does pretty well. It's like the dollar store of food. Okay? Oh yeah, that's something I wanted to touch on that I forgot to do, and I know I just went on to like a ramble there and a rant, and so I kind of haven't been looking at questions. Any good books for beginner swing traders? Honestly, I didn't read that many books. I pretty much just taught myself everything. But for the books I did read, definitely read Intelligent Investor. That's a good one. It's a brilliantly written book, Intelligent Investor. Trading in the Zone by Mark Douglas. I should probably just write my own book so I could rec my own book to you guys, but maybe one day. Trading in the Zone by Mark Douglas. There's another good day trading book by Andrew Aziz. Ross Cameron's book. He wrote a book that I actually read a long time ago, and that's not bad. It's actually a pretty good day trading book. Has some pictures in there, so some visual things that you can look at. That's a pretty good book too. I wouldn't deny that. What else? Those are really all the main ones. I mean, you could read like Stocks for Dummies. That one's, it'll have some information in there. But yeah, that's about it. Those are usually off the top of my head what I recommend. Didn't look at MU. I'm big and strong. Yes. And I am jacked. No, I haven't been to the gym in a while. I've been slack on it. Like that. There's another good thing. I've had my membership to a new gym for a while and basically haven't gone for like the last 2 months. So I'm just spending $60 for no reason. Might as well stop going. If a recession hits and I become, and my income gets slashed in half, maybe I'm going back to Planet Fitness. I don't know. All right. Never thought about teaching economics. I need to learn more about economics before I could teach it. But like that's actually literally something on my to-do list is to study and self-teach myself more about economics. That way I can actually speak about it more here. I know a good amount, but I don't know enough to really get into all the nitty-gritty. But if I could, that would be great. It'd be awesome. And that brings a whole new spice to my channel. And actually, I'm not going to lie to you guys, is I feel like I've been extremely stagnant in terms of my growth. Personal growth, not only on YouTube, pretty much YouTube, personal growth, and some things inside my life. Just I feel like I've been very stagnant for the past couple months. You could possibly blame it on nice weather and things like that, but do expect that in the near weeks and near months and over the course of next year that my channel is going to change a bit because I'm going to be putting in a lot more work to do different style videos, not only just charts, but we're going to start looking at a lot of different things because YouTube is a part of my income. That is one way I make income in life, and I would like to grow that income. And one way I have to do that is by branching out and kind of spicing up my own channel a bit. So we will have some changes in the future on that. How much do I play per trade? Sometimes a couple thousand, sometimes 100,000, sometimes 20,000, sometimes 5,000, sometimes 200. All depends. Do I trade options? Yes. Am I like the world's best option trader? No. Do I know everything about options? No. Do I know a lot about options? Yes. No, there's no good telltale sign when the market slips. Not really. $8.58. Nice, Adrian. Yeah, I was buying GLD and SLV like 2 years ago. Well, in my own personal retirement account that I manage, I was buying silver and gold like a year and a half. And then in one of my retirement accounts is managed by other professionals. I think we started buying gold and silver like 2 years ago. What determines the amount? The price of the stock, how it's set up, how long you plan to hold. And those are all things you have to figure out for yourself. There's no one shoe fits all, right? It's like TRNX, right? If we look at TRNX, and by the sec, I gotta go. I gotta head back to our private group here in a sec. But like TRNX, right? If you look at TRNX, it bounced perfect, right where it should have. If you look at TRNX, like the stock is like 60 cents. Like you can't make shit on TRNX with $1,000. It's just not gonna like. Let's see if you had. So let's see, it's what, 60 cents. So if you do, let's just say we did, 5,500 shares. Ooh, that's 55,000 times by 0.6. That's 3,300. So then you go 5,500, times that. Let's say it gets up close to, I don't know, let's say it goes from 60 cents to 70 cents, right? Times that by 0.7. Would you make $350? I think it was 3,500. Was that the correct answer? Wait, let me do that again. Okay, so you make like close to $500, right? So you have to put in, a decent amount of money. And, the way I trade is like, if I was going to trade this, I'd be trading this by in a share size of like 25,000 shares, 40,000 shares, because I would be looking for this to go from, 50 cents and squeeze up to like 7. Like I want to make, if I'm going to trade this low price of stock, I'm going to hit it big, right? That's generally what I'm going to do. And so if you look at the moves that it typically makes, right? If you were going to hold this all day long, that's great. But if you're going to trade just like a little pop and break setup, I mean, this is 55 cents to 63 cents. With slippage, you're probably getting 4 cents a move. You need some big shares. You need a lot of shares to make any decent money on that. So it's like that. That's one where I would trade big amount of money. All right, guys. With that being said, got to get back to our private group. What do you think about investing in precious metals? You should be investing in precious metals when the markets are getting shaky. All right, guys. So with that being said, everybody take care. Have a great day. And I will see you guys all tomorrow morning for another day. And other than that, I will see you guys next time.